There's a plan that's been in development for 8 years, a plan that could fundamentally change how money works in America, not gradually, overnight. By 2026, there are discussions about the Federal Reserve launching a central bank digital currency that could potentially replace physical cash. But this isn't just about convenience or innovation. It's about how our financial system is evolving. We're talking about a level of oversight over every dollar you earn, every purchase you make, and every financial decision in your life. What many people might not be considering is that a digital dollar isn't just coming to compete with cash. It could be designed to eventually replace cash. And if that happens, what does it mean for your savings, your privacy, and your financial freedom? Because digital money isn't just money you can't touch. It's money that can be programmed, monitored, and restricted. The Federal Reserve has been exploring this transition since at least 2014. Not always in the headlines, but through carefully orchestrated pilots, policy papers, and international coordination that most people may have never heard about. What if, by 2026, when a digital dollar launches, cash is declared obsolete for public health and security reasons? What if your bank accounts are automatically converted to digital wallets, and your physical dollars have a limited time to be exchanged before they lose value? This isn't just speculation. It's a conversation based on documented Federal Reserve policy papers and ongoing research. Let me show you the plan, the timeline, and what could happen to your savings when money becomes programmable. The Federal Reserve's digital currency project didn't just begin recently. Back in 2014, the Bank for International Settlements published research papers exploring how central banks could gain more insight into economic activity through digital currencies. The Federal Reserve Bank of Boston then began studying distributed ledger technologies with MIT. The goal was to understand how digital currencies could monitor financial behavior. The project expanded in 2017 when Federal Reserve Chair Jerome Powell announced the creation of FedNow, publicly described as a faster payment system. But FedNow was never just about speed. It was about building the infrastructure for a potential central bank digital currency, the payment rails, identity verification systems, and real-time monitoring capabilities essential for a digital dollar. By 2020, the Federal Reserve had published multiple research papers on CBDC design. These papers discussed concepts like programmable money that could enforce spending rules, streamline tax collection, and even implement negative interest rates that would encourage spending by reducing the value of savings over time. Did you know the U.S. government might be planning to replace your cash with a digital dollar? A 2021 Federal Reserve paper laid out the features of this new currency. Imagine real-time transaction monitoring, programmable spending restrictions, and even automatic tax collection. Most shockingly, it mentioned the ability to sunset or completely eliminate physical cash. When could this happen? In 2023, the president of the New York Fed, John W., said they're accelerating development, targeting a mid-decade deployment. That could mean as early as 2025 or 2026. The infrastructure is ready, the legal groundwork is being laid. All that seems to be missing is a crisis to justify its immediate rollout. But how would they get everyone to switch? They won't force it, at least not at first. The strategy is more subtle. Phase 1 is all about convenience. The digital dollar will be introduced as an optional and superior alternative. Think instant payments, zero fees, and full government backing. They'll even offer incentives like digital dividends, monthly payments you can only get in a digital wallet. Tax credits and emergency aid might also be exclusively distributed this way. It will seem like a no-brainer to switch. Then comes phase 2, strangling the cash infrastructure. Handling physical money will become incredibly expensive and complicated for banks and businesses. New regulations and high fees will make ATMs unprofitable. A narrative will emerge that cash is dirty, unsafe, and used for illegal activities. Suddenly, using cash will feel irresponsible. Phase 3 will bring legal restrictions. New anti-money laundering rules could require ID for any cash transaction over a small amount, say $600. Paying for larger items with cash might even become illegal without government permission. The regulatory burden will make using cash a huge hassle for everyone. Finally, phase 4, complete prohibition. Citing public health and national security, cash could be declared obsolete. You'd have a limited time, maybe 90 days, to exchange your physical money for digital dollars before it becomes worthless paper. After that deadline, the cash in your pocket would be gone for good. This isn't just a theory, it's a potential roadmap. What are your thoughts on a cashless future? Let me know in the comments below. The timeline for this process is 18 to 24 months from initial digital dollar launch. By 2028, physical cash will be illegal to use, impossible to obtain, and worthless to hold. Every financial transaction in America will flow through digital systems controlled entirely by the Federal Reserve. What makes central bank digital currencies terrifying isn't just that they eliminate cash, it's that they make money programmable. And programmable money means programmable people. Unlike cash, which works the same way regardless of who holds it, digital dollars can be programmed with restrictions, conditions, and expiration dates that control exactly how you can spend your own money. Spending categories can be restricted automatically. Your digital dollars might not work for alcohol if the government decides you drink too much. They might not work for gasoline if the government wants to reduce carbon emissions. They might not work for guns if the government opposes gun ownership. Your money will enforce government policies even when you disagree with them. Geographic restrictions can limit where you spend money. Your digital dollars might not work outside your home state without government permission. They might not work in businesses that don't comply with government regulations. Time restrictions can force immediate spending. Your digital dollars might disappear if not spent within 30 days. They might lose value over time to encourage consumption instead of saving. They might be automatically transferred to government accounts if held too long. Social credit integration can link spending power to behavior scores. Your digital dollars might be reduced if you express unpopular political opinions. They might be increased if you comply with government recommendations. They might be frozen if you associate with people the government considers problematic. Emergency powers can suspend your financial access entirely. During declared emergencies, your digital dollars might not work for non-essential purchases. During civil unrest, your ability to spend money might be limited to approved vendors. Tax collection becomes automatic and inescapable. Every transaction is visible to government authorities in real time. Tax obligations are calculated automatically and deducted immediately. Tax evasion becomes impossible because there's no way to hide income or avoid collection. But the most dangerous feature is retroactive modification. Digital dollars can be programmed to change after they're in your wallet. Money you thought was yours can be automatically transferred to pay fines, fees, or penalties you weren't aware of. Your savings can be modified, reduced, or eliminated based on policy changes you had no voice in creating. This is the ultimate control system. Not just monitoring what you do with money, but controlling what you can do with money. And once cash is eliminated, there's no alternative, no way to opt out, no way to maintain privacy, no way to resist. The savings transfer, how they'll take your wealth. The most critical moment in the digital dollar transition will be the mandatory conversion period, when all existing savings must be transferred to digital wallets. This process is designed to look voluntary and beneficial while giving the government unprecedented access to private wealth. The conversion will be presented as automatic and seamless. Your bank accounts will be upgraded to digital dollar wallets with better features and stronger security. Your savings will be protected by government insurance that's more reliable than private banks. But the conversion process creates opportunities for wealth confiscation that don't exist with traditional banking. Unlike bank accounts that are regulated by banking law, digital wallets will be controlled by Federal Reserve policy that can be changed without congressional approval. During the conversion, inactive accounts will be subject to automatic review. Savings that haven't been accessed in 6 months will be flagged for investigation. Large balances will require proof of legal source. Foreign income will need documentation of tax compliance. Any irregularities will result in account freezing until resolved. The verification process will be designed to create compliance costs that exceed the value of small savings accounts. Hiring lawyers to prove legal ownership of your own money, providing years of tax records for routine transactions. Many people will abandon small accounts rather than fight bureaucratic battles. Unclaimed accounts will be transferred to government custody after 12 months of inactivity. The burden of proving ownership will fall on account holders, not the government. Legal proceedings to recover frozen accounts will require expensive attorney representation. Large accounts will face wealth verification requirements. Balances above $250,000 will require annual proof that funds weren't obtained through illegal activity. Investment income will need documentation of tax compliance. International accounts pose the biggest risk. Americans with foreign savings will be required to transfer funds to U.S. digital wallets or face 50% penalties for failure to comply with currency regulations. Cryptocurrency holdings will be declared illegal unless converted to digital dollars at government-determined exchange rates. Private cryptocurrency wallets will be banned. Only government-approved digital asset custodians will be permitted to hold alternative currencies. The most dangerous element is emergency wealth taxes that can be implemented automatically during crisis periods. Economic emergencies can trigger automatic deductions from all digital wallets to fund government response. These emergency measures will be temporary when implemented, but permanent in practice. By the end of the conversion process, every dollar of private savings will be controlled by Federal Reserve algorithms that can monitor, restrict, or confiscate wealth based on policy decisions made by unelected officials. The most disturbing aspect of the digital dollar plan is that it's not uniquely American. Over 100 countries are developing central bank digital currencies simultaneously with remarkably similar features and timelines. This level of coordination doesn't happen naturally. It's planned. The Bank for International Settlements has been coordinating global CBDC development since 2018 through regular forums that bring together central bankers, technology companies, and policy organizations. The goal isn't just to create digital currencies, but to ensure they operate as a unified global system that eliminates financial escape routes. China launched the digital yuan in 2020 and has been testing features that will be implemented globally. Spending restrictions based on social credit scores, geographic limitations on where money can be used, automatic tax collection and fee deduction, expiration dates that force immediate consumption. The European Central Bank's digital euro project includes privacy protection that actually enables more surveillance than traditional banking. The Bank of England's digital pound design includes programmable money, features that can restrict spending categories and implement negative interest rates. Technology companies are building unified infrastructure that will enable seamless international digital currency transactions. The same systems that process China's digital yuan will process America's digital dollar. The same algorithms that monitor European transactions will analyze American usage. This means there will be no escape through international diversification. Moving money to foreign countries won't provide protection if those countries implement the same monitoring and control systems. Offshore banking won't help if offshore banks are required to integrate with home country CBDC systems. The ultimate goal appears to be a unified global financial control system where no one can escape surveillance, no one can avoid compliance, and no one can maintain financial privacy or independence. This isn't conspiracy theory. This is documented international cooperation that's been publicly announced. Digital currency implementation requires a crisis that justifies immediate deployment. Gradual adoption doesn't work because people resist giving up financial privacy and control. Sudden implementation during crisis periods bypasses resistance because alternatives become unavailable. Multiple crisis scenarios could trigger immediate digital dollar deployment. Each has been war-gamed by Federal Reserve officials and international partners. The infrastructure is ready. The legal frameworks are prepared. Only the activation trigger is needed. A major banking crisis would provide ideal justification. If several large banks fail simultaneously due to commercial real estate losses or derivative exposures, the Federal Reserve could declare traditional banking unsafe and implement digital dollars as emergency stabilization measures. A cyber attack on banking infrastructure could justify the same response. If hackers disable credit card networks, ATM systems, or electronic payment processing, digital dollars could be deployed as cybersecure alternatives. A cash shortage crisis could force immediate implementation. If currency production is disrupted by supply chain problems or transportation breakdowns, digital dollars become the only available money supply. A debt crisis that forces monetary policy changes provides the most likely trigger. If foreign countries stop buying treasury bonds and force the Federal Reserve to choose between massive interest rate increases or money printing that destroys currency stability, digital dollars could be implemented as monetary stability measures. Once any crisis triggers deployment, the transition becomes irreversible. Emergency powers suspend normal legal protections. Crisis conditions eliminate time for public debate. Alternative payment systems become unavailable during chaos periods. The crisis will create conditions where digital dollar adoption feels voluntary and beneficial. People will choose digital money because cash becomes unavailable, banks become unreliable, and traditional payment systems stop working. The choice will be digital dollars or no money at all. The digital dollar transition will create the largest wealth transfer in American history, not through market forces or economic competition, but through policy changes that eliminate alternatives to government-controlled money. Government agencies win unprecedented power over economic activity. The Treasury Department can monitor every transaction in real time. The Internal Revenue Service can collect taxes automatically without enforcement mechanisms. Law enforcement gains tools that make financial privacy illegal. Large corporations benefit from reduced competition. Digital payment systems favor companies with technological infrastructure over small businesses that rely on cash transactions. Technology companies profit from building and maintaining digital currency infrastructure. Middle-class savers lose the most. People with traditional savings accounts, retirement funds, and conservative investment strategies will see their wealth become subject to government control and policy manipulation they never anticipated. Cash-based businesses and workers lose their livelihoods entirely. Small merchants who serve cash customers, service workers who receive cash tips, independent contractors who prefer cash payments. Entire economic sectors that depend on financial privacy will be eliminated. Privacy advocates lose the battle completely. Financial privacy becomes impossible when every transaction is monitored and recorded permanently. The anonymity that cash provided for thousands of years disappears forever. Senior citizens lose financial independence. People who grew up with cash and understand traditional banking will be forced into digital systems they don't trust or understand. But the most profound loss is psychological. Financial autonomy has been fundamental to personal freedom for centuries. When money becomes programmable and controllable, when every financial decision is monitored and potentially restricted, the relationship between individuals and government changes forever. The resistance. Your final choices. The digital dollar transition isn't inevitable, but preventing it requires understanding the timeline and taking action before the infrastructure deployment makes resistance nearly impossible. The window for action is closing rapidly. Once digital dollars launch and cash elimination begins, alternative strategies become much more difficult. Congressional action could prevent implementation, but Congress has shown little interest in the details of monetary policy. Individual preparation strategies focus on maintaining alternatives during any transition period. Think about physical assets that hold value independently of digital systems, or skills and relationships that enable economic activity outside monitored channels. Precious metals can provide some protection as stores of value that can't be programmed or monitored electronically. But using metals for transactions requires willing counterparties, and government regulations can sometimes make these transactions more complex. Cryptocurrency might seem like an alternative, but many cryptocurrencies could face new regulations once official digital dollars launch. It's likely only government-approved digital assets will be fully integrated, and they may be subject to the same monitoring systems as digital dollars. The most realistic preparation involves building skills, relationships, and resources that provide value in any monetary system. But the fundamental reality is that resistance becomes exponentially more difficult once implementation begins. The choice isn't whether to resist after implementation. The choice is whether to take action before implementation, while alternatives still exist. Once a new digital currency launches, the window for meaningful resistance could close for good. This isn't just a distant future scenario. The Federal Reserve has spent years researching and building digital dollar infrastructure. International coordination has worked to establish compatible systems globally. Legal frameworks have been prepared for potential emergency implementation. The only remaining requirement is a crisis that could justify immediate deployment. When a crisis hits, you might have just 90 days to convert your cash and understand the new rules before your old money is phased out forever. Your savings could become programmable money, controlled by systems you may not fully understand. Your financial privacy could change permanently. Your economic freedom might look entirely different. And your children could grow up never knowing that money used to work any other way. This is one of the most important financial discussions of our lifetime, and it's being driven by institutions that might not have your personal preferences in mind. A digital dollar is coming not because people are demanding it, but because those in power could benefit from the control it provides. If you understand now that programmable money could mean programmable people, if you recognize that digital currency could be surveillance disguised as convenience, if you see that financial control is the ultimate control over human behavior, then you understand why this matters more than any political election or economic policy you'll face. The Federal Reserve's research plan isn't a secret. The timeline is becoming clearer. The infrastructure is ready. A crisis could be the trigger, and your savings are the target. Your money, your choice, your last chance. Thanks for watching.